Hi traders, this is Focus Trader, and this video will be about opportunities we saw with our BOS Trader tool on today's markets, and I will try to give you as much know-how and ideas how to trade our BOS Trader indicator as possible, as much as possible. Okay, so let's get into it and let's have a look on GBP USD, GU in short, on 1 minute time frame, and you see that I have already my BOS Trader indicator turned on, and I will show you my settings currently. Since I'm on 1 minute chart, I'm using fixed mode because I don't use that often time frame mode when I'm live trading. I rather use fixed mode with setting of 30, which gives me basically liquidity every half an hour or so. It's not that simple, but basically I'm looking for candles that has 30 bars on the left and right, which are lower or higher for pivot highs or pivot lows. So basically this candle, for it to generate a liquidity line, it needs to have 30 bars on the left, sorry, and 30 bars on the right. Okay, so that's it. I showed you my settings, and let's see this opportunity because this is something very interesting for me, and I will explain our set of rules on this opportunity to trade, and I will tell you why this could be our trade and what the reasons for filtering it out would be if we don't want to trade this. So I will go through my checklist, and I will share that checklist with our subscribers later when we make it more beautiful and we add up some videos explaining all the concepts. But let's start with the first point, which is the liquidity grab. So if this entry should be valid, there needs to be a liquidity grab. And also I need to mention that also you need to have your alert set up. So if you are willing to trade something like this, it's a good idea to have current settings of BOS Trader set like this for fixed mode for 30 minutes, and you basically right click and add alert. You will choose BOS Trader, and you will use basically I think the only reasonable option will be AOI, because if you choose enter signals, it will alert you every time this signal happens, but it won't give you enough time to trade it. But some people wanted it, so I added there, but I use AOI. So when I click it, I am clicking also the option once per bar close, which will send me alert on after the bar closes, so it won't repaint, so it won't generate any problems with I don't know, multiple alerts for just one AOI, etc. So just use only once per bar close, meaning if this bar closes and the AOI is generated, you will be alerted. So basically when this candle, when this dark candle, black candle closes, the AOI is generated. So you got 1-2 minutes before this candle closes, and the signal is generated here. So it will give you 2 minutes to prepare your trading, and I think that's enough. If you know the checklist, if you have a set of rules and you are accommodated to it, you will be able to trade it. Okay, so once per bar close, and here you just choose if you want pop-ups, emails, or anything that you like. Also, you could add some specific message. The default is area of interest just popped, so just something you can change, but it's not necessary, right? So I will receive my alert at about 7:59 my time. So just remember that you can be in different time zones, so your time could differ. I'm UTC +2, so it depends on your time frame and your settings, and also your settings of the alerts time. So I have session setting of from 2 to 14, which is this session time is from exchange time zone. So if I switched here to exchange, you will see that I start with 2 o'clock, 2 a.m. basically, and it merges this. So yes, this alert truly needs or should be created. Okay, so I will again switch to UTC +2, and that's it. Okay. I received my alerts, and now I'm going through the rules. So liquidity grabbed. Yes, liquidity was grabbed. And the dynamics of price action. So how big the candles in the reaction are. There are very strong sellers candles, and there are very strong buyers candles, the reaction candles. And you see that the size of this candle, basically the volatility in this candle, is bigger than the average of the previous candles. So this is really a strong bar, which represents very strong activity of buyers, and it also creates imbalance. So if I draw FVG, the FVG will be like so. We have also FVG indicators. So if I turn that on, you see that the fair value gap is truly there. So this is something that you are looking for. And this is not a fair value gap. This is AOI. So don't be confused if I hit this FVG indicator there. That's the AOI. So just to make sure that you know that it works, if I turn on just the FVGs, you see here FVG, here FVG, and it speaks about the imbalance of buyers. So buyers are very strong. So first, liquidity was grabbed, true and confirmed, so I can enter the position. Second, the dynamics of the price action. Yeah, there is a strong bar and it generates fair value gap. So I will really be looking for buying opportunities because buyers are there, they are present, and they are strong. Then I need some confirmation from the left. So what I mean and what's the way that I'm using it. I use for my decisions volume. So I will go to see as much chart as possible, and I will just draw my areas with volume. So I will do something like this, and you see that there is some volume distribution here. There is significant hill, and it goes like this. So you see it was tested here and here and here and here. So this area is already tested several times. So this is not a good confirmation. So I'm going to most recent time, and I will draw a profile on this area. And what I see here, first, there is this distribution area. And again, on this value area high, which is the high of this hill of volume, basically, the first reaction, second reaction, third, fourth, fifth. So there are a lot of reactions there. And when we have the area like this, there are three significant levels. The first one is this high, value area high. Second is the POC, and the third is value area low. So this is for me very important area, very significant. And we see that the reaction is basically there. What I'm usually looking for is the diminishing volume from the last strong volume local POC, meaning the local extreme of volume. So the extremes of volume are here and here. So this is the last one. This is the last place where big players were accumulating their orders, because big volumes are generated with or by strong players, not by retail. So this is very significant volume. And the area where the volume is getting lower is very significant area for reversals, because smart money wasn't willing to trade there. The volume is getting lower and lower. So this is very nice area to look for your trading opportunities. And I hope that I will be able to show you much more opportunities in this video. I think that you could see also here. Here is the area. This is last place where they placed their significant volume, and this is the area where the volume is getting lower and lower. And if I prolong that, you see that where the volume ends, usually the market reverses if there is no reason for them to go to the upside. So this is just another way to look for your support and resistance in a smart money way. This is the truth about smart money, not some price action concept, but the truth about smart money is that what they are represented by is volume in chart. That's the only reason many people speak about smart money, order flow, and institutional bars, etc. But everything that smart money does is represented by volume on the chart. So if you don't know about volume, you can't trade as smart money do. Okay, so this is the area where the volume is getting lower, and we could expect our reaction there. We could also draw just this distribution area, the area where there is most of the volume, and you see also that at the end of this area the market ends up there and turns to the upside. Okay, so that's the confirmation from the left. That's another filter that we use. So we have our confirmation here, so this is totally okay to trade here. And space, the very important thing also is to be very careful when there is volume above you. So you see this area of distribution, this area of significant volume. Since it's generated in Asia, you won't expect that it has too much power. But again, if you mark your area where there is the highest volume, which is this area, it's also marked with this blue color, and it basically calculates the value area of the area you choose to draw your fixed range volume profile. And I will show also other way how to see volume without this volume, because this is only available for pro and higher subscriptions on TradingView. So I will show you the way how to draw your volume profiles without volume, and I think you will like it. Okay, so here is the point of control, the area where there is the highest volume, and you see the market reactions. Again, there is value area low, and we have our reaction there. There is the POC, and we have our reaction there. And then there is the value area high, and they reacted on this local POC. They didn't have any reaction there on this value area high, but they reacted on this point of control, local POC, local point of control. Okay, there will be some more videos about volumes in the future, so you don't have to understand everything. This, I'm showing you just my decision process and things that that I'm considering when I'm entering position. But also need to mention that I have my volume zones already prepared when I'm starting to trade. Okay, so this is something that I do on my morning preparations before trading. My trading session starts, right? So we see the reaction here. It was a small one, and then market continued up. So if we want to enter this position, enter this buy signal, we need to check if we have enough space to realize at least 1-to-1 or 1.5 risk reward ratio. So I will draw the potential here for first target, and it's 2.2, which is enough. I sometimes when I'm trading counter trend, meaning that the trend will be bearish in this case. I'm not sure if it is, but this is a consolidation. So currently we are the market is neutral, so we could trade both directions, either bearish or bullish. But we see that there is enough space to realize at least some minor profit, and our rules are of position management. When we hit our first target, we move stop loss to break even. So basically we will get some partial out here, and there will be a break even there. And also what I want to be basically paid for is my commissions and stuff. So it's a good idea not to use just 1.1 risk reward ratio, but use something like 3-to-1 risk reward ratio, because the three digits basically will be for commissions. So just keep in mind that you need to pay for your commission, pay to your broker every time. Okay, so okay, this is also valid entry because we have space to realize profit. And again, this is something that you will be already prepared before you enter this position. This after you know all the rules, all the conditions, and you get used to them. And also I need to mention that you don't have to use all of them. I myself don't use every single one of them. I use just several of my filters, but I'm wanting to show you all that we could consider, and people are choosing the rules that they like and are able to use. Then there is how the signal looks like. So if it's a strong bar and represents very high activity of buyers in this case, when we are looking for opportunities to go long, and this candle truly is bullish bar, and it closes very close to its high. There is just a small wick there, so this bar basically represents aggression of buyers, because it is very big when I compare it to other bars that are present before, and it closed very close to its high. So this is also another filter, how the signal look like, what the candlestick pattern is, and I see that this is truly very good signal. Also, BOS Trader has price action candlestick patterns coded in it, and you will see buy only when there is a price action or candlestick pattern confirmation. So this is something that you just need to keep in mind, but BOS Trader does this for you. So if this pattern is valid or not, shows you BOS Trader. Then there is a accumulation of liquidity, and there is a slight problem here because it's also equal low, and equal low basically is unfinished auction. You can see it also here, and the market has tendency, before it turns to bullish, to grab also this minor liquidities which are happening intraday. So it's interesting that they didn't grab this liquidity of these equal lows, but they didn't. So this is also the information of the aggression of buyers. So this is also something that will confirm that the direction is right. But in this case, you see that there is this is a double bottom, and you see also this liquidity line here. So what I need to check if this liquidity is dangerous, and this liquidity is not dangerous. Why? Because you see that the liquidity was generated here, and this movement only grabbed this liquidity and then turned around. So this movement created pivot low, meaning that this bar is lower than the 5 bars or 10 bars or any other number. I have currently set it to 30. So this candle is lower than 30 bars on the left and right, but this movement only grabbed this liquidity. So this liquidity is diminished by that. So this is not such powerful liquidity. If you compare it, for example, with this, you see a consolidation happening after this liquidity grab. After this movement that grabbed liquidity, there is a consolidation, and when there is consolidation, the volume is compounded, and liquidity, the buy stop orders or sell stop orders in this case, and buy stops here. So some orders rest there waiting to be filled, which are looking for breakouts. So the liquidity there is much bigger than here. When we are in Asia, there is very small market movement, so basically no orders created there. So this liquidity is not something that I will be troubled by. So no wonder that they didn't grab it and they reversed, because there was no liquidity there for anybody, because nobody trades in this session, or not significant volumes trade in this session. So if I show you, for example, the volume of this, you see that there is some volume accumulated there. So there should be really some stop losses and sell stops. And if I draw volume here, you see there's basically nothing on this lower wick, right? The volume is here in the high places. Okay, so that's another thing that I consider when I'm planning to when I'm planning to enter the trade. And let's get to other one. So this was about the liquidity that will be endanger this position, liquidity grabs that will endanger this position. And then there is the time that passed after the AOI was generated. So basically I wouldn't enter something here because, and let me explain, this will be the area of interest. If I make it extended like so, I won't trade this in this area, even though it could be, I don't know, order block or anything, because I'm already seeing reaction here. So for every situation, this liquidity grabbed and the reaction of buyers generated some potential move to the upside because of aggression of buyers, and because this was just a liquidity grab and you expect market to reverse. But if this reaction happens and then market goes back, you could very well expect that they want to grab some liquidity on lows or to continue even lower to seek for new liquidity, which is there and there. So you could expect them to want to continue to lower. So what I'm wanting to see is the signal happening as soon as possible when the AOI is generated. Sometimes you get very nice trade in these later entries, but my rule that I'm using, and this is something that I use every time because it's very easy to recognize, is to enter only on first several bars after the AOI is generated. So you need, basically what you need to see is very strong and very fast reaction of buyers. If there's liquidity grab, sell side liquidity grab, you need to see very strong buyers reaction and very fast one and enter it as soon as possible. So that's the reasoning behind that. And there are other rules that we use, and I want to explain liquidity trap because it's something only for subscribers, but let me explain the last impulse, which is something which is very interesting. So basically you can go to higher time frame, but you could also recognize it on lower time frame. So I'll switch to 30 minutes, and I think that the trade was here, possibly. Yeah, here was the trade, and I'm looking for the last strongest move on the chart, and you see that the last strongest swing is here. If you compare this size to, I don't know, for example, this size, so you need to very strong, very fast price action. So if you have something like this, you don't extend it here because there is consolidation happen in between that. So this is not aggression, this is just some pullback or something like that. It's not the strong movement. So we are looking only for very fast market movements. So this one was very strong buyers action. This one was very strong sellers. And this one could be very strong sellers. And you see that the sizes of these movements are really very similar. We see very strong sellers there. So if you zoom out a bit and you see what is happening there, you will see that there were strong sellers pushing price to the downside, and then there are impulses up here and here, and that's it. So after this very strong movement of sellers, there was very strong buyers reaction, very strong one. There were some sellers here, but here the last two movements in the markets were very strong buyers, and you don't see any strong sellers between those. So the last impulse, last strong sort of unconsolidated move, there is no consolidation in this area. I mean, no significant one. These are just several bars, but here is, I don't know, several hours of consolidating. But this last move is bullish, so you will expect bullish signals. You will only want to see bullish signals because you are acting according to the last strongest movement on chart. So this is basically what we call last impulse filter, right? So this is something that I want to explain. And we also do things like daily bias and so on, but I don't think that it will be in the scope of this video, which is already over 20 minutes. So I think it's enough here. And then also you will need to watch for macroeconomic events. So just check your calendar. If something big is happening on the market, just beware and don't trade against that, because it's very dangerous to trade when some news are coming out. Okay, so let me get back to 1 minute and let me turn on BOS Trader, and I will go very quickly my thinking process, and I will tell you what the reasoning behind my trades are when I'm live trading, and I will wait for BOS to appear in a while. Again, it's a very robust script, so sometimes it takes some time, and we have it. So the main thing for me would be the volume from the left. So I will have that area drawn here. So let me again draw it back, and I will have like this distribution there. So I will have this. You see the consolidation happening there. So there are a lot of a lot of orders accumulated there, a lot of volume generated. So this will be my market area, and I will see there is liquidity grabbed. This liquidity is not dangerous for me because it's only liquidity grabbed of this liquidity before, so there's no liquidity behind that, no reason to go there. So this is not endangering. And the most important thing for me is the imbalances, the strength of price action. So I see very strong bars. I see that I have space at least to here, to this consolidation, which will still give me a 1-to-1 risk reward ratio if I place my trade like so. And I will be afraid of this consolidation here, of this lot of candle bodies there. So still I will be able to make more than 1-to-1 risk reward ratio. So I will also be able to pay my broker the commissions. Very nice. Okay, so this trade is totally viable to trade. And if some people are not moving their stop loss on break even, you see that the potential of this trade was really high. And also it was very usual setup of liquidity grab of Asia, since this could have looked like Asia liquidity, but it was not, because it was already grabbed. So only this new liquidity was interesting. This very small, very minor consolidation, which I won't count as a strong consolidation, but still some orders could be there. And liquidity grabbed, the very strong price action reaction. We have the space to realize at least 1-to-1 risk reward ratio profit, and currently we'll be looking at, I don't know, 26-to-1 risk reward ratio if we didn't move our stop loss to break even. But if we do, we will end up with small profit, partial profit, not full profit, and then we'll be stopped at the break even. I use always break even plus, meaning I still want to end this position with a plus. I don't do zero, because zero you pay some commission for your broker. So always place your stop loss slightly above, or I do it like I place it slightly above the break even point. Okay, and that's it. That's this trading opportunity explained. I also explained some of the things and concepts we use, and if you don't understand everything, I will surely make more videos in the future explaining more concepts that we use, and I will show you also some live trades. So if I screen or push record button in the right time, I will gladly show you live entries to my trades. And also I'm still considering to do some live streams on YouTube. So if you are willing to look at them, watch my videos, you are welcome to do so. So if you like this video, if you get something from it, please like, subscribe, and join us in there will be a link in the description to Discord. So I will gladly see you in our group and explain all the stuff more in detail. And if you like to use this indicator, just check our website, focustrader.com, focused/trader.com. You will see also a link in the description where you could learn more about our indicators. There are also some other videos on YouTube, so just don't hesitate to check it out, because I think that this is really cool stuff to enhance your potential as a trader, and it will surely increase your consistency as a smart money concepts trader. And that's all for this video. So thanks if you looked at the end, until the end, and see you next time.